We have Jagadish Nangineni, who is the MD at SOBHA, now joining in. Jagadish, thanks so much for taking time out. In line in terms of street estimates with your Q1 numbers, the year-on-year pre-sales growth has been higher than we saw in the previous quarter, Q4 FY'24. What has aided this growth, given that a lot of your peers have been talking about election seasonality, heat waves, a slower rate, etc.?
Well, the main strategy that we have been following for the last several years, which is the geographical diversification, has really aided this kind of numbers even in Q1, which is, like you mentioned, probably we had certain external factors. That's one. And second is, in the last 9 months, we have launched close to 10 million square feet across geographies. And this particularly, and this is the first time, in fact, we have clocked 67% of our sales have come from non-Bangalore locations. So that's the geographical diversification at play for us.
Okay. SOBHA is an area which is very largely dominated by the IT sector. And IT sector is not hiring, it's not going through a great time. Even in the startup space also same trends are there. Could that affect future business and could that affect near-term demand?
See, we are, like you said, we are operating in cities where we cater to customers who are largely migrants looking for housing in the new locations they have migrated to. So as the economy grows, and if we are very optimistic about the economic growth, then it should lead to job creation in these cities, and it should percolate to discretionary spending in real estate. And that's what we think that in the long term, that should how it should play. In the short or the medium term, which is tech sector doing well or not doing well, that is, we are not seeing that on the ground yet. Because even if you look at the commercial offtake in locations like even in Bangalore, I mean, last quarter, the commercial offtake has been one of the highest. So while there might be issues in IT sector in certain pockets, but overall demand seems to be continues to be reasonably good.
Continues to be reasonably good, and I guess that's underscored by the launch pipeline that you have, almost 19 projects if I have it right. Could you talk to me about what's the GDV of all of these projects? What's the split between commercial, residential, or what time period are they expected to come through?
Well, we are a residential focused real estate player, and more out of the 1917 are residential projects. And these on a GDV basis, it should be at an average pricing of about 11 to 12,000. So that should be about 20,000 crores odd. And while we have two small commercial projects, both based in Gurgaon, they also will hopefully we'll be able to launch them in the next 4 to 6 quarters.
You're also, going deeper into the entire NCR region. Of course, you had come up with that big project in Gurugram. Now you have bagged a land in Noida as well. Talk to me about what kind of plans do you have for the NCR region?
This is in line with our strategy of deepening our presence in NCR. We have been in NCR for the last 15 years, and although we had gone through a very tough cycle, but we have emerged very strong there, and we are seeing a good demand. Like you would see for the entire North India, which is about caters to 40% of the population, NCR is the only job creating market. And we think that there is great potential in the entire NCR market, be it Gurgaon, Delhi, or in Noida markets. And that's as part of that strategy, we have looked at several opportunities, and this is one option that we won. This will be our first project in Greater Noida. It's a small land parcel, about 3.44 acres. Going forward, we'll continue to evaluate opportunities in NCR and while in other cities as well, which is we have good presence in small presence in Pune and Hyderabad. Those also are important markets for us. Of course, our mothership is based in Bangalore. We are looking at opportunities here and growing in fact, bringing our current land bank into projects. So all, like we are present in uh, 12 cities in India right now. We would we would like to first focus on the uh, cities that where we are already operating in. While there are good opportunities in some of the other cities, we will keep adding to those as we grow.
Which category of Shobha, when I say luxury, semi-luxury, basic entry, is seeing highest demand?
Nikunj, if you are looking at the residential demand, I would say that the demand is across ticket sizes. It's not necessary that we are looking at only demand in only in one kind of ticket size. But when the economy grows, if you look at the pyramid structure of the in terms of demand, the demand is across the whole pyramid. While in the last couple of years, we would have seen that there is a lot of demand for the luxury segment. We have seen that demand across ticket sizes. When we say ticket sizes, yeah, we have homes from almost studios, which is about 650 to 700 square feet, to large luxury row houses and villas to 4,000 to 5,000 square feet apartments and row houses. So the demand has been pretty much good in all segments. Now it's up to us as where do we choose to operate. And as a company, we have always chosen to operate. Our bread and butter business has been largely in apartments, which is ranging between 1,800 to 2,000 square feet. And we would largely stick to it. We have done some launches in the last couple of quarters in the higher ticket range. We are catering to that. And we have in our basket the other product portfolio also, which, like I said, we have close to 9 million square feet of unsold inventory now, which which is catering to ticket sizes across the whole spectrum of consumer base.
Okay. It is normally believed that the real estate cycle is a 7-year cycle, and we are 3-4 years, already 5 years, some would say, into it. So can I say another 2 years and then the cycle effect would kick in?
Well, we are seeing the demand continuing to be steady. So it's I'm not sure about the cycle part because it is very dynamic, but I would tend to agree that for the past it is for the last 3 years it's been very good post COVID. The way we would like to play the cycle is in this manner, irrespective of the cycle of the market. So in the last 3 years, particularly after COVID, what we have done is we have reduced our debt financial leverage considerably. Now, for the 15th straight quarter, we have reduced debt, and our debt to equity, net debt to equity now stays at 0.47. On top of it, we have done a rights issue and raised capital of about 2,000 crores, which we have successfully done last month. So this gives us a great financial stability to maneuver the cycles and also take opportunity to the next level when there are opportunities present during these cycles. So in both ways, we are the way we wanted to play the cyclicality of the industry is to being much lighter on debt and focus on new launches and also monetizing our land bank.
Your time, that's the word coming in from the management of SOBHA, talking about how demand is robust across all ticket sizes, and as of now the geographical diversification has aided the Q1 earnings. 1691, that's where the stock is currently at. But
if you like this video, then like, share and subscribe to ET Now.